Hey everyone, and welcome back. Today, we're diving into something that sounds like a dream come true for any homeowner: the skip payment mortgage. It's pitched as a break right when you need it the most. But is it a genuine lifeline, or is it a cleverly disguised trap? Let's dig in.
Come on, we've all been there, right? You're staring at your bank account, some unexpected bill just blew a hole in your budget, and that huge mortgage payment is just looming. What if you could just hit a skip button? No frantic calls, no late fees, no stress. It's an incredibly tempting thought, and for some people out there, it's actually a real thing. But how does it really work? All right, so to really get our heads around this, let's start with the ideal situation. Let's look at the dream scenario, how a true, legitimate skip payment mortgage is actually designed to work. Okay, so what are we even talking about here? Well, a real skip payment mortgage lets you miss a payment, sometimes even a few, if you hit a temporary rough patch. Like a medical emergency or losing your job, and you can do it without getting slammed with penalties. But, and this is the part you've got to pay attention to, the interest you would have paid, it doesn't just vanish. Nope, it gets tacked right on to the main balance of your loan. And this isn't some financial fairy tale. In places like Canada, this is a real product you can get from major banks. The rules are pretty straightforward. You can usually skip 1 month per year, and some banks will even let you skip up to 4 in a row. The catch? You have to be a model borrower. We're talking a great credit score and a spotless payment history. But the huge benefit is you get that breathing room when you need it, and your credit score doesn't take a hit. But you know how it goes. If something in finance sounds a little too convenient, there's almost always a catch. So now it's time to talk about the hidden cost of hitting that pause button. And that catch has a fancy name: interest capitalization. It sounds complicated, but trust me, the concept is simple, and it's really important. That interest from your skipped month, it gets added right to your mortgage principal. So from that day forward, you're not just paying interest on your original loan, you're now paying interest on the interest. It's a compounding effect that silently makes your loan more expensive over time. And this comparison just lays it all out crystal clear. On the left, your typical 30-year loan. On the right, that same loan but with just one skipped payment. Now look, the loan term is the same, and yeah, you made one less payment, but check out that bottom line. The total amount of interest you end up paying is undeniably, absolutely higher. So here's the bottom line. The one thing you have to remember: skipping is never, ever free. It's not a gift from your lender. You are, for all intents and purposes, borrowing the amount of that one payment, and you'll be paying interest on that borrowed money for the rest of your loan. It's a quick fix that has a very, very long financial tail. Okay, so that's the deal where this is a real regulated product. But what about here in the United States? Well, this is where it gets murky. This is where we have to talk about what our source material calls the American skip payment trap. So if you're a homeowner in the US and you get one of those letters in the mail offering to let you skip a mortgage payment, our source material has some very strong advice. I'm just going to read the quote directly. Borrowers should treat these offers with extreme prejudice. Whoa, extreme prejudice. Those are some seriously heavy words. So why the 5-alarm fire? It's because the offer is almost always a bait and switch. Let's break down how this trap works. Step 1, you get a flashy offer in the mail promising you can skip a payment. But step 2, it's not really a skip offer, it's a sales pitch to get you to refinance your entire mortgage. Then, during the weeks it takes to close a refi, a payment gap naturally happens. The marketers cleverly call this a skipped payment. But step 4 shows the truth. That payment wasn't skipped at all. It's just bundled into the closing costs of your new, bigger loan. It's a marketing magic trick. So if those offers are basically junk mail designed to trick you, what are you supposed to do if you're a US homeowner and you're really struggling? The good news is there are real, legitimate options out there. So let's look at the actual toolkit you have at your disposal. And this is the million-dollar question, isn't it? What are the real, safe, regulated tools you can use when you're in a financial bind? Forget the slick mailers. Let's talk about the programs that your lender is actually supposed to help you with. In the US, your two main lifelines are forbearance and deferment. Now, they might sound similar, but how you pay the money back is totally different. So this is super important. Forbearance pauses or shrinks your payments for a while, but you'll have to set up a plan to pay back that missed amount pretty soon. Deferment, on the other hand, usually kicks the can way down the road, moving those missed payments to the very end of your loan. Which one is right for you completely depends on your situation. Okay, that was a lot. So let's just boil this all down to the absolute must-know points. First, real, true skip payment mortgages, you're probably not going to find one in the US. They're incredibly rare here. Second, even with a legit one, skipping always means you'll pay more in total interest. Always. Third, those offers you get in the mail to skip a payment are almost always just a hook to get you to refinance. And finally, if you're in real trouble, the words you need to know and talk to your lender about are forbearance and deferment. Those are your real options. And all of this leaves us with one big question to chew on. That idea of a skip button is so attractive because it feels easy, right? It feels like a simple, quick fix for a giant, stressful problem. But this whole thing really makes you wonder. When you're dealing with your mortgage, which for most of us is the biggest debt we'll ever have, is a quick fix ever the right move? Something to think about. Thanks for watching.